There are no shortcuts to building wealth today. It takes time, effort, sacrifice, and diversification. But today, diversification means something different than it did in the past. You deserve a more secure way to protect and grow your wealth. At Delta Harbour, we take this to heart. Our mission is to help by inviting you to add physical gold and silver to your wealth strategy. Book a free consultation today and let us show you how to protect and grow your wealth through the ownership of physical gold and silver. Let us show you the Delta difference. Hey everybody, welcome once again to Hard Money, Sauga 960, and YouTube, of course. If you catch the video cast, youtube.com/Delta Harbour is where you'll find it. You can reach out anytime to Darren and his crew as well, 1-888-335-8645, deltaharbour.com. Harbor with the U, because this show, this investment, this opportunity to expand your portfolio, always about you, deltaharbour.com. Let's get through this, Darren. We got a lot to cover on the show today. Busy week for the economy. So much happening as we tape Friday. Silver and gold, both of your favorite metals, tear higher. So how was the week for you over there, pal?
It was a great week indeed, John, and thanks for the warm welcome. It has been a busy one as Monday through Friday went seemingly very fast, and we've had little in the way of breaks and downtime, but ultimately a great week indeed, because what we had talked about a few weeks back as being the summer doldrums, great opportunities for people to stack up on their gold and silver, start new investments, kind of take a bit of their vacation time, because a lot of people had staycations, John, like many people stayed in Ontario, of course. And we talked about that being a great time to take a look at your wealth strategy, take a look at your portfolio, figure out what the next step might be and how to add some more diversification. And seemingly this week began for a lot of people the process of adding gold and silver through registered accounts, which we will talk about on today's show. It's not the topic, but we will bring it up. Gold here as we tape on Friday, as well as silver, both up much higher on the day. Gold is up about 1% and back over 1,800, which is a critical mark. As our listeners know, we've discussed it. 1,800 is a very, very stronghold, big stronghold for gold, and we expect to see it go much higher. Silver up over 1.5% today since open this morning, and back up again, right up against $24 an ounce, and looking to go over. Hopefully we'll get a close above 24, and if we do two closes above 24, we're likely to see a push towards 24.50. Now, both metals have been over the last few weeks fairly range bound, and they provided a gap of about 2 to 3 weeks of excellent buying opportunities, which a lot of people took advantage of through these summer doldrums, which are now coming to a slow close, John, as the kids get ready to go back to school. Who knows what the fourth quarter is going to hold for everyone. But as we come to the end of summer, or at least back to September, people are getting back to work, people are getting back to school. And of course, congratulations to all those that have taken advantage over the last few weeks, and welcome aboard to Delta Harbour Assets. We're glad to have you here with us. And listen, this is the spot to be right now. If you want to add real diversification to your wealth, I think that as we go through this show today, gold and silver is a place to be for sure.
You know, it's interesting. We've always said, and you know, I've worked for many years about this, and it's a lot of this whole exercise and getting people involved is about the fact that maybe their wealth strategy has gotten a little bit stale, and they've just kind of been sitting back in their laurels. So a show really about wealth strategy sounds intriguing to say the least. It should to everybody if they're looking to make some money and secure a more of a financial future for themselves. So what are we talking about when you say changes to wealth strategy? I've heard you use that term before.
Absolutely, John. Well, today's show, our focus and the title of the show is called Skewed Economic Data. How do you invest when you don't know the truth? I mean, a lot of people are passive investors. So they just give the money to the bank, to the advisor, to the planner, and they say, hey, listen, do your best, you know, and we passively sit by and hope that year's end, when we actually look at our wealth once a year, that we made more than we lost. And people don't really pay too much attention other than that. That is, in a nutshell, a lot of what, unfortunately, Canadian wealth has become. But the data is getting more and more skewed, John. So even the professionals like myself and other analysts, we're having a difficult time in some instances, unless we dig deeper, unless we go beyond the scenes, unless we experience it firsthand. And when we're talking about changes to wealth strategy, we're talking about looking at data such as, inflation and CPI. We're looking at housing numbers, interest rates, unemployment, the cost of living, all major economic indications. And there's a growing concern that the data is getting more and more distorted. Interpretations of weekly data, economic data come certainly with a caveat, but it's not hard to understand that caveat either, John. What we're saying about skewed data is simple. We're near the top of a boom-bust cycle and not the bottom. And ultimately, we want our clients to participate and do well. And our governments want that cycle of boom to last as long as possible. So they're skewing the data. There's no two ways about it. We're going to talk about it today, a few different points. But they're skewing the data to extend that boom cycle to make it look good. And they're doing it throughout all the G20 nations. The G8 nations are super guilty of it with all the money printing they've done, with all the low artificial interest rate environments that they've used to encourage lending, borrowing, and we've seen the effect here in Canada. Housing rates up 30%. People can't afford to pay for things anymore. Friends of the government and corporate insiders are the first to get out. And it's the biggest warning sign that gets flashed when we're at the top of a boom cycle. And right now, we have to recognize that corporate insiders are selling. I mean, we're talking with my colleague Rob today. We were talking about Richard Branson. Look how much Virgin stock he's sold over the last little while. Look how much Apple stock is getting sold by insiders. GE stock getting sold by corporate insiders. They're all selling because they're uncertain of what the next 12 months holds. We have to recognize those implications, John, of higher inflation. You have to own assets, solid assets, tangible, hold in your hand assets above and beyond real estate, above and beyond land, like gold and silver that have performed very well over very long periods of times. These are good investments in the threat of inflation when the threat of inflation takes hold like it is right now.
Always get the contact out during this hour as well. And 1-888-335-8645 online to deltaharbor.com. Harbor with you. You mentioned inflation. We've done past shows completely on inflation. I think those listening now are more than likely to realize that it's becoming a problem. You just have to go down your grocery list and just life in general coming through this pandemic. Tell me what's happening with inflation now.
Well, I think the primary concern is that we're witnessing the cost of goods and services rise fairly dramatically. If we look back at the last 30 years or so of data, we haven't really had an inflationary period like we're experiencing right now. The case in point, as we come in here and tape on Friday, the price of a liter of gas is pushing $1.40. And that's one of the highest points that we've ever experienced, aside from that flash rise in prices back in 2008. This, on the whole, is going to last. We're not going to see a price per liter of gas, despite the fact that a barrel of oil is half of what it was in 2008. We're not going to see it come down. It's going to stay here. It's with us to stay. Might fluctuate a nickel, a dime, but at $1.40, it's now going to poke and burn a hole in our pockets faster than it's done in the last 10 years plus. And when you look at it, it's not the only thing happening, John. We've got shrinkflation, which essentially means we're getting less in our packaged goods than we did a year ago or 2 years ago. You know, we're getting less in the candy bar, less in the bag of chips, less in the bag of vegetables we bring home, all the foods that we put into our fridge, the fluids that we drink, the cans, the bottles, everything's going to be a little bit less as we go forward here as inflation eats away at the margins of the retailers. So you're going to see that happen and prices are going to go higher. You got food costs rising and expected to rise further across the board. We've got US reported inflation at around 5 to 6%. And we've got Canadian reported inflation at around 3.5 to 4%. And these, well, in and of themselves, these are egregious. But this doesn't tell the whole story. And really, we have to focus on what options we have to cure these problems. So if we're looking at a wealth strategy, John, we have to think about ways to tangibly improve our diversification, be contrarian. You don't want to do the same thing everyone else is doing or experience the fear of missing out or recency bias and buy at the very top of a market at a boom phase. We don't want to be doing that. We want to be contrarian in our thinking. A few weeks back, we did a show on contrarian thinking, but ultimately, we are expanding our repertoire of diversification within our wealth portfolio. So owning assets like gold, physical gold, bars, silver, coins, those are very important steps that we can take to help mitigate the risks that lie ahead based on this skewed data that we're experiencing. A lot of distorted data out there. I hate seeing it. I hate having to interpret it, but we bring in good colleagues, good people that we trust to really help us with this growing concern, this growing problem that we have.
It's a good opening salvo, bud, and we'll take a short break from there. You'll want to reach out to Darren, Rob, Roy, the rest of the crew, and start educating yourself on this investment, these tangible physical assets of gold and silver. Reach out to Delta Harbour, 1-888-335-8645, and deltaharbor.com as well. Those interest rates don't sound that bad. Inflation rates, rather. Are they truthful? I don't know. We'll get to it. We'll dig down on that with Darren next as we continue Hard Money right here on Sauga 960. And welcome back, Hard Money, Sauga 960. Reaching any time, reaching out to Darren and his team. If this has piqued your interest, it should. It's about expanding and hedging your portfolio, getting hard assets in the form of gold and silver physical assets. You can hold them, you can toss them, you can store them, you can do anything you want with them, but get the information first and learn about it if you don't know already. 1-888-335-8645, deltaharbor.com, and youtube.com/Delta Harbour as well to watch these video casts and more online as well. So we mentioned, or you did mention in the last segment, Darren, about the inflation numbers. The U.S. numbers being given out a little higher than the Canadian numbers, but we're thinking, you know what? They don't sound that bad. Doesn't sound good. It's not zero. It's not positive, but is it really that bad? Are those truthful numbers?
Well, as I said, the U.S. is reporting on paper that their inflation rate is around 5-6%. Now, it's slightly down from what it was month over month, as July slowed that rate on paper anyways, a little bit. Here in Canada, the rate is reported at 3.5 to 4%. And you're right, John, if we don't look behind those numbers, we're never going to know for sure, are we? I mean, ultimately, we want to give consideration to the way our cost of living is changing. And we know that we're experiencing much higher costs. Maybe they're related to COVID. Again, some of that argument is there, and we can make that argument. But ultimately, we want to make sure we're looking ahead at where we're lying. And one of the most valuable things you can do is to look at inflation data the way it used to be measured. You see, John, it's a very simple argument. And ultimately, if you look at the way inflation numbers used to be measured, they were a truer measurement of true inflation. And when they altered them back in 1980, what they did was essentially learn two things. One, they believed on paper and told the public that their equation was much more accurate. However, it wasn't. And two, it resulted in less inflation. So cost of living adjustments in a unionized environment in particular, which was far more popular back in those days, meant that employers didn't have to adjust as much. If you had an inflation rate that was running 8 to 10%, your cost of living adjustments so that your employees were staying in sync and not losing money had to be higher. And right now, if you have street inflation that they report at 1 to 2%, which is what they want, then cost of living adjustments end up being 1 to 2%. So employers that are giving them don't have to give high rates of adjustment, which is very costly to an employer. Now, that being said, I use John Williams of shadowstats.com. That's John Williams of shadowstats.com. And I follow that website and have for over a decade. And this is a gentleman who definitely has maintained a website which has measured a lot of the economic data the same exact way as it was done back in those days, prior to administrative changes and things of that nature. So we look at that data, we keep it very simple, and John Williams in the world, hands down, is most accurate. He did a video this week, and we'll post that to our Twitter account. He did a video this week, and in it he stated that if we use the measurements from 1980, that the U.S. inflation rate would be much closer to 13%, and in Canada, we'd be much closer to 8%. And that gives us a true snapshot of where we really are, because I trust that data much more so than I trust the data now, because I know for a fact governments are going to manipulate, banks are going to manipulate, analysts are going to manipulate that data to make it look good for them. And so if it means that they can stay in the boom of a cycle rather than the bust side of the cycle, it means much more commission, much more fees. They look much better as a government because they can report there's better and more positive economic data. And so that's what happens. We get this data, it gets skewed, but we are passive. And if we don't look towards making better decisions for our wealth, we end up making poor decisions. So that ultimately is a huge situation. And we have to look at that for what it's worth. We need to have a tangible strategy to hold much better assets in our portfolio.
Again, 1-888-335-8645 to reach out anytime to Darren and his team, deltaharbor.com. So if I'm sitting back, Darren, and I'm making my lifestyle, my financial moves, even into gold and silver for that matter, based on a couple percent, 1 to 2% inflation, because that's what I've been told. And on this side of the border, if I'm really sitting at 7 to 8%, what in the long term is that going to do to my wealth?
Well, I mean, inflation robs us of our purchasing power, John, plain and simple. And it is a silent killer of wealth that we don't pay attention to very often because we're being lied to about the true rate of inflation. Whether governments use terms such as transitory or temporary inflation, it's still killing our wealth. The average person has but few ways to beat that. The housing example is the perfect example. Over the last 12 months, houses are up 30% in Ontario, okay, 30%, which now means literally 9 out of 10 people, due to the fact that the average home costs 1.1 million plus, are unable to afford a home. So they got to go out and borrow heavily. Family, friends, banks, secondary lenders, and they got to pray that those interest rates stay nice and low. So we get skewed data. It causes the rate of inflation to rise because housing is a major portion of how we measure inflationary pressures. And ultimately, if we look at that, it means if you knew inflation was clipping along, and let's say your portfolio, and you're sitting there with your planner, your advisor, your bank manager, the person that handles your money or your income, or you yourself are directing your own wealth, then ultimately you have to be aware of where inflation is. Because if inflation is at, let's say, 8%, and my overall return is only 5%, it means I lost 3%. Case in point, just a couple of weeks ago, there's an article out, all the major newspapers covered it, stating that in the first half of 2021, the teacher's pension had a return of 3.9%. It's being celebrated across the board. Wow, teacher's pension, big, huge pension, big, huge slosh fund of money, and 3.9%, not that bad. That means they're in position, if they do another 3.9%, to make over 7% return on the year. Wow, amazing. The problem is, what if the rate of inflation is 7%? It nullifies all their gains. And then you add the fees to that to administer and manage that, which are going to be in and around 1 or 2%, maybe more, and they've lost money. And so ultimately, we don't think about these things. And so if portfolios right now are averaging less than 5%, John, we have to make note of that. We have to get in front of that and protect our wealth with good quality hard assets that respond very well when these situations arise at the top of boom cycles where data gets skewed.
So why is it? I know we got a break in a couple of minutes, but why are gold and silver so attractive in an inflation scenario?
Well, it's purchasing power. That's what it comes down to, John. Plain and simple. They hold their value over very long periods of time, and during a real threat of inflation like we're seeing now, and we saw back in, let's say, 2004, 06, 08, and during the post-financial crisis between, let's say, 8 to 2011 or so, give or take, both gold and silver rose dramatically during those times. They had very unprecedented short-term gains against those threats of skewed data, and in particular, if we're looking at inflation, against inflation. It takes very little to move gold and silver in the affirmative, and they are both very poised right now. They have been trading in a tight range. They've been doing very well, and we think that 2022 is a huge year. So when we do come back from break, John, I want to share an example of why I believe gold and silver hold their purchasing power over very long periods of time. And I can guarantee our listeners won't want to miss this. You've heard this anecdote before. It's the 4-dime example in the gallon of gas. And I want our listeners to know about it because it shows over a very long period of time how silver and gold hold their value.
Quick break before that, though. We will get to it. 1-888-335-8645 and deltaharbor.com. We'll continue. This is Hard Money on Sauga 960. Welcome back. Hard Money, John Scholes, Darren Long here. Delta Harbour is where you want to go. deltaharbor.com to begin the purchasing and the expanding of your portfolio. Get that hedge in there. Some physical assets in the form of gold and silver. These are physical assets. They're not paper. Nobody else owns it. You will own it. You can actually hold it in your hand, but you got to reach out first. 1-888-335-8645 as well. Okay, I love this. We talked about this before for years, Darren, this anecdote, this relationship of money and how it goes along with inflation and purchasing power. It's the 4-dime example. For people who haven't heard this, run us through it again. Tell me about it.
Well, it's a really simple example, John, and it illustrates very clearly how silver in particular holds its purchasing power. Many out there may have heard of the example of 1 ounce of gold buying back in Roman times a toga, and they'll equate that today to the same thing, 1 ounce being able to buy a nice suit and a very nice meal, and it still does that. And that's an easy example, but I like to pick on silver. It's my favorite metal, and ultimately the 4-dime example is simple. In 1967, Canada stopped issuing currency that had 80% silver in it, coins. So our quarters and our dimes, 80% silver in them. They stopped doing that. In 1967, for 4 dimes, you could buy 1 gallon of gas. Before we converted to a different measurement system, you would be on the gallon, and we would buy 1 gallon of gas for 40 cents, 1967. Now, if we fast forward to 2021, what can I buy with those 4 dimes? I mean, our listeners are sitting out there thinking about it, but the truth is nothing. We can't even buy a piece of candy anymore for 40 cents. Inflation, in other words, has eaten away at our purchasing power over a very long period of time. That 40 cents no longer buys what it did a long time ago. However, if I take those 4 dimes from 1967 and I take the silver out of those 4 dimes, and I was to convert that silver to dollar value, in 2021, it still buys me a gallon of gas. Despite the fact that gas prices just went way up overnight, it still held its purchasing power some 50, 60 years later. And that ultimately, for me, spells out very clearly why every single portfolio, in some respect, small percentage or otherwise, should have physical gold and silver over the long term, whether it's just to gain money on those short bursts, whether it's to protect purchasing power in the example we just gave, where you're no longer able to buy as much, your dollar doesn't go as far, whether it's for both, whether it's to pass it down to the next generation. It doesn't really matter. It's a fascinating example and look at the ways in which inflation and skewed data that causes us not to consider inflation a problem lead to serious wealth deprivation over long periods of time. Our dollar simply doesn't buy as much as it used to.
You know, it's interesting too. We can hardly get through a show without mentioning something to do with real estate, and it's really scary. I mean, if you look at your house, I look at my little house here, how the value skyrocketed. Sometimes I turn around going, "Really? Someone will actually pay me for that? This house is worth that much money?" But you know, what about that notion of diversification into gold and real estate? You've talked about that too.
We do. And listen, I'd be the first to say that I spent a chunk of time in my early days in the industry talking down about real estate. And I mean, I wanted people to keep in check. And ultimately, I thought real estate was one way that people could lose sight of what the end goal was to have balanced wealth over the long term, for which the average Canadian person could not afford to have speculative real estate. Well, those days have come and gone. Low interest rate environments, artificial interest rate environments, and the belief that real estate is the way to go. We've got big red tape here, which limits the amount of building that we can have in Canada. And as a result, in particular in Ontario, we've seen a huge example of just how housing can run away in prices and how speculative playing on the real estate market can affect home prices. Now, to the extent that 9 out of 10 people looking to buy a new home can't do it. So when you look at real estate, if you are a real estate speculator, rather than suggesting don't do it, be paying attention to fear of missing out. Are you buying real estate because you think you're going to miss out? Is it recency bias? Did you hear from Uncle Pete that his real estate in Peterborough is doing really well, so you bought some too, without looking into it? So to apply a simple equation, John, when it comes to real estate, use my 10% rule. For every $100,000 worth of real estate that you buy, speculative real estate or land, have $10,000 worth of gold or silver. That's a 10% rule. Have 10% of the value of the real estate or land that you're buying, add 10% gold, silver. A very simple rule to follow. If you have $1 million worth of real estate, have roughly $100,000 worth of gold and silver. That's speculative real estate, above and beyond your primary residence. If you are capable of buying and owning comfortably without fear of losing your properties, and you're capable of investing in speculative real estate, that's the way you do it. You got two tangible assets in gold and silver that you can hold in your hand, that allow you to sleep at night. They have a better track record than real estate. I hate saying it because I love real estate. I own real estate, but they do have a better track record over the long term, at least since I've been in the industry, averaging each somewhere around 10 to 11, 12% per year cumulatively. And I think you sleep a lot better at night when you have a well-diversified portfolio. So stick to the 10% rule. And, I don't know how our listeners feel, John, but I want to be part of the haves. I want to be part of that crowd of people that live comfortably, that can go out and buy something and pay cash for it. And that's what I do. That's why I've applied these principles to my investment strategies. My wealth strategy includes gold and silver, as it should, I believe, for everyone else. And if we look across the board right now, in US and Canada, we are completely unsure of what the future holds. We don't know whether we're leaving COVID era or whether we're entering phase 4. We don't know whether interest rates are going higher or staying where they are. We don't know whether house prices are going to plummet or just pull back a little. A lot of uncertainty in the market, especially at the top of a boom cycle, which is where we are. So despite the fact that analysts are calling for an extended period of boom, that might be fine and dandy. Why not add an additional portion of comfort level to your portfolio by having gold and silver, which effectively in a downturn are going to do much better, at least historically.
Again, 1-888-335-8645, deltaharbor.com. There's also the factor of unemployment on this side and the other side of the border as well. That completely changes the equation too.
Well, it does, John. I mean, ultimately, we find ourselves with abnormally high unemployment at the moment. We have not come off the COVID problems that we're experiencing and face, and the challenges that have lied before us. We're seeing employers argue that they can't get enough employees. We're seeing employees argue that you're not paying me enough to come back. CERB's done; it's over with, but subsidies are still out there, and some people are arguing that in the lower end wage jobs, lower end salary jobs, there is just not enough incentive to return to the workplace. So they're staying home and they're soaking it for what it's worth. This is part of what the argument about the skewed data represents. This is leading us to these situations, and we're focusing our efforts on saying, hey, this is COVID related, when in reality, this is skewed numbers. This is skewed data. This is what's leading to this. We're not getting real inflation adjusted cost of living expenses or cost of living adjustments made to our income. So our wage gap is continuing to increase against countries that are realizing there's an inflationary problem and are dealing with it. So you got to have gold and silver in your portfolio. Whether it's for protection and insurance of your wealth, whether it's to grow your wealth, whether you want to speculate, if you're a speculator and investor. We're going to talk more about the strategies of gold and silver when we come back in the next segment. In particular, let's highlight how easy it is to get gold and silver into your TFSA, your RSPs, registered accounts of any type. If you're out there listening and you have a registered account, you could be adding gold and silver to that account.
We'll give you details on how to do all that. That is the crux of the entire show. So that is coming up. Stay tuned for it. In the meantime, write this number down, 1-888-335-8645. That will put you in touch with Darren and the rest of the team at Delta Harbour and online to deltaharbor.com as well. We'll continue. This is Hard Money on Sauga 960. Welcome back, Hard Money. Good to have you along for another show. Darren Long is here educating you and opening your horizons as far as opening your portfolio to some hard assets in the form of gold and silver. If you haven't dipped your toe in those waters, they're pretty clean, they're pretty clear, but you got to know about it first, right? There's many different ways to do it. Darren, you talk about using registered accounts like RSPs, TFSAs, which are awesome, LIRAs, RIFs, all that stuff. Give us some details on how you can use those accounts to get physical metals into your investment strategy.
Well, first off, through Delta Harbour Assets, you can have physical gold, physical silver in bar and coin form in your registered account. Doesn't matter whether it's a TFSA, an RSP, locked in LIRAs, spousal RSPs, RESPs, RIFs, LIFs. We're there the whole journey, every step of the way. We hold your hand throughout the entire process. So that's first. Secondly, most people don't realize this, John, but putting it into a registered account, you get the same exact benefits as you normally would when you're using that account for stocks, mutual funds, or other types of investment vehicles on paper. So ultimately, that means in a TFSA that if you buy gold and silver and put it into a TFSA, it is capital gains free. The price of silver rises from $25, $24 an ounce, all the way up to $100 an ounce. There's no taxes on that. And you've got an asset that's tangible that can be withdrawn from the account. You can deregister the account, take it home with you, pass it on to the next generation. Likewise, in the RSPs, you have obviously the tax deferral incentive that applies to physical gold and silver as well. It's very easy to do. There are no ongoing management fees, just a little fee for storage and insurance. Above and beyond that, our expertise is there every step of the way. Our guidance of buying and selling will do that for you. You have a dashboard. You can log into that dashboard and you'll be able to add other hard assets to that portfolio. And, if you want to talk to us about that, you can do that. But you can also add other paper assets. You can go in and invest in stocks. You can add stocks into that portfolio. You can add your mutual funds. And the best part about it, John, is actually that you can take your existing TFSAs or RSPs from another bank or another institution, and you can migrate them over to Delta Harbour, and you can do that using the existing money. So you're not dipping into your pocket. If you just feel that it's a smart thing for you to have gold and silver, and you've already invested in your RSP, and you've got a nice sizable RSP, and you'd like to bring any or all of that over to Delta Harbour and put gold in there instead, or silver and gold, or just silver by itself, you can do that. Ultimately, we'll have your hand every step of the way. It's a very simple process, and we've been doing it for quite some time. I personally have been opening up those accounts since 2015, hundreds and hundreds and hundreds of those accounts open, and we work with a good partner in Questrade, which provides our dashboard and a place to log in, which gives us a regulated oversight. So people that are concerned about that, it will be watched and maintained. And your product's tangible, John. Yeah. It's hold in your hands product that you can touch, see, go and visit. And like I said, deregister anytime, take home and store yourself or pass on to the next generation. It's a very, very excellent way to take advantage of what they've given us in terms of the incentives for TFSAs and RSPs. And ultimately, I suggest that everybody consider, at least as a bare minimum, the TFSA, if not more than that.
A lot of people are going to say, "Oh, but Darren, I have some in paper form. That's how I have my my precious metals, my gold and silver. I don't need to carry it. Why would I want that? I got paper."
Well, it's a great point, John, that you make. And I think a few weeks ago, we actually discussed it. The fact is that if you have physical hold in your hand, gold and silver, it responds and acts differently than paper companies. Mm-hmm. Paper companies are subject to the same threats of the boom bust cycle. And even though you own a gold miner, it still has third-party liability. You could still wake up in the morning and find that some fraudulent activity occurred, and that company, even though they've got gold in the ground and money in the bank, somebody embezzled 50 grand out of the company. Boom, the company goes to zero. Likewise, I don't discourage people from having diversity in their portfolio, but buy the company. If you actually want physical gold and silver and you want the performance of physical gold and silver, you don't buy a company or a mining stock for that. You don't own the gold. You can't use the gold after the investment's done and finished, and it does not act in the same manner as gold and silver do. I have seen periods of time in which the paper market for gold and silver miners has plummeted down while the price of gold and silver has stayed right where it is or gone much higher. So ultimately, I think holding a tangible asset, a physical hard asset, is the smartest way to do that.
It's all about truth. It's all about education, but it's really hard for people to make the right choices when the data is skewed or it's not truthful. I mean, it scares me to even think that experts who manage money and are supposed to be your custodian for all this stuff, they're making bad decisions about my wealth. I don't like that.
Well, you very rarely hear it. You're not going to call up your planner or advisor and have them tell you that, yeah, I'm making decisions based on skewed data. But even in the gold and silver market, we have to look behind the headline curtain and seek the ultimate truth about what inventories are doing, what actual rationing is out there in the world, what mints are having a problem getting their product to markets, all the things that impact silver and gold on the physical side. We have to look at that every single day. And it's a solid point, John. If people don't realize that our financial system is severely distorted right now already, and it's paved over with unreliable data, they need to be listening to a radio show like Hard Money, and they have to get more insight into their wealth and what's really happening out there. If we cannot get reliable data, then how are we supposed to make sound decisions about our wealth? If we see COVID numbers jumping substantially and we don't believe it, how can we make real accurate decisions about our health, right? If we, likewise, if nothing's happening, but I'm looking around and everybody beside me is being impacted by something, well, where's the data showing it? I mean, this is the day and age we live in where it's very easy to manipulate data. It's very easy to change it. And a lot of reporting after the fact gets done because these are estimations and updated, and we think nothing of it. Headlines don't even pick it up. So if we want to look at that from what our responsibility as investors are, then we have to think about having contrarian wealth, having diversification in our portfolios. And, it's going to impact a lot of the decisions we make. And we want to have additional assets like physical gold and silver in our portfolio in order to combat those threats.
So how does one go about doing that? We got to get some of that gold and silver into your portfolio. Again, physical assets is what we're talking about.
Well, our accounts are really simple, John. If somebody wants to shop online and look at our website, we give pricing. And when you look at the pricing, you'll see that if silver on that day is, by paper, $24, we say spot, which is what you see reported in the news, and on our website, you'll see it on the ticker, plus for each product. So one product might be spot plus $2. Another product might be spot plus $3. You look at that, apply some simple math to it, use and work within a budget that you've set aside for gold or silver, and take it home with you. We'll send it to you. We'll bring it to you. You can pick it up. You can buy it and store it. We have a storage account available, which means in your name, your allocated product is set aside for you. Serial numbers, if you wish to have them. If you're investing in coins, it'll be segregated, but there are no serial numbers. And that product can be visited. You can set up a time to do that and audited. And of course, you can make changes to that by phone, which keep it very liquid at a very low cost. In addition to that, we just talked about the registered accounts. You put gold and silver in TFSAs, RSPs, liras, and all those types of great things. And it's easy to do that. It's about a 15, 20-minute process. And then you just transfer some funds into the account. And if you want to take further advantage of it, finance your product. If you're really into getting the most bang for your buck, we have an option to finance up to 80% of your purchase, which means one of two things. Either you can take 1 ounce and turn it into 3 ounces, or you can take that $1 you're going to spend in silver or gold and hold back as much as 80 cents of that, and somebody else's money do the work for you. So financing is an option as well, up to 80%. We have that in our bulk bullion and collateral financing program. 4 easy ways for people to own precious metals through Delta. Our website shows it all, John.
And we'll drill down a little further on some of those points after we take one final break here and get into the last few minutes of the show. To get hold of on the phone, easy, 1-888-335-8645, deltaharbor.com, Harbor with you, and to watch all these video casts and more information to get educated, youtube.com/Delta Harbor as well. We'll continue. A few more minutes to go. Hard Money on Sauga 960. Welcome back. This is Hard Money. Darren Long, always here each week, educating you and opening up doors of possibility when it comes to investment and increasing the wealth of your portfolio. How do you do that? If you haven't done it before, try some hard assets. Hard assets meaning physical gold and silver. That is what Delta Harbor deals with. That's all they deal with, and they are expert at it. Reaching out, 1-888-335-8645. Just make a phone call. Just have a casual, chilled out chat with Darren or one of his team, and they'll educate you even further beyond what we talk about every week on this show. deltaharbor.com is another way. We have been talking several times during this show, Darren, about skewed data. It's coming at us from all angles, and people are just swallowing it and eating it and trusting it because they don't know where else to go. Can it be fixed? Can we change the government? Can we get someone else who's better managing this stuff? How do we clear the smoke, man?
Well, listen, with in particular on Sauga 960, I love listening to the station, but strong political opinions, certainly fix is there, but whether or not the will of the people is another question. We have to let them know that this is a problem. We have to let them know that this distorted data cannot continue because we're making poor decisions based on it. And ultimately, we're going to be the ones to pay for it. We're going to be last in, first out, especially when it comes to things like housing based on low interest rates, which are about to rise over the next year. Believe me, the Liberals get into power come 2022 spring. We're going to have additional increased taxation coming out in that budget. And it is going to be payback time for everything that we have spent in the last 15 months during this COVID pandemic. So ultimately, can we fix it? That's a very, very difficult question to answer, John, but we've been taught to trust the data, and we shouldn't. The governments can't be honest anymore, because honesty would cause a nightmare in the system. If you were to tell the truth about inflation and not call it transitory and not call it temporary and say this is the way it's going to be for the next 5-6 years, what happens? Well, employers have to change and adjust to that by offering better wages, because employees are not going to choose their places of employment over others that are offering better wages. And wages really only rise during periods of inflation. The idea that we're going to pay more for somebody really is only applicable to higher end career positions that are paying 100,000 plus, where we're trying to retain top talent. Otherwise, the average person is not going to see a wage increase, and it would cause shock and awe, John, if we were to tell the truth. So we got to get behind this, make changes to our wealth strategy, stay balanced and well diversified. And you have to have more than just the paper assets. You got to observe the 10% rule we talked about earlier. If you're a speculative real estate investor, 10% of all the value of the real estate you're buying should be in the form of gold and silver. It's the 10% rule. It's my own personal rule. If you buy $1 million worth of real estate, my opinion is that you should have $100,000 worth of gold and silver backing that, because when push comes to shove, John, those interest rates go higher starting next year, we are going to see shock and awe like we've not seen before in a very, very long time. Every single economist is forecasting interest rates are going to rise across the entire G8 over the next 2 years. And you can bet your bottom dollar, as I said earlier, that Ms. Freeland, if the Liberals actually get voted in, even if they form a minority, there is going to be a need to pay back this COVID. PCs will have to be in the same position. Heck, if NDP got in, they'd have to pay back this debt. You can't continually keep borrowing from the people, because we don't have it. We are going to lose dramatic amount of value and standing in the world economic community if we don't start paying attention to this debt and start paying it down. So ultimately, we're about to see what happens come voting in the next month. We're going to see. And ultimately, I hope that we make the right decision as Canadians to pick the party that's going to deal with this chaos.
Well, there's no quick fix, right? It's more or less the same thing as we go forward. So many speed bumps, as you mentioned, are met with printing presses, and we push skewed data envelope further and further. People get more bogged down with all this misinformation. No better time really to make sure you've got some additional insurance, like you said, physical gold and silver in your portfolio right now. Get it happening. Get a chunk of it in there.
John, it's so true. I couldn't say it any better myself. Ultimately, we have to be looking to ensure our wealth. And I think if people do their due diligence, gold and silver have a proven track record. I didn't make it any more than any of my colleagues in the industry did. This is ultimately something that gold and silver has done for a very long time. It has protected purchasing power. We gave the 4-dime example earlier. We have a YouTube video on the 4-dime example. Just go to our YouTube channel. You can listen to it, see it, and view it anytime. I actually show the 4 dimes. And that is something that proves over the long term, gold and silver do hold their value. Yes, they have periods like any other asset in which they're of less value. Yes, we experienced a very big chunk of time between 1980 and 2002 where silver and gold were not highly valued assets, where people didn't want them. But now, and I think for the next 15, 20 years or more, we are going to see the tables turn. We have a very, very deep problem in our economy right now. We have a lot of recency bias, a lot of FOMO. Housing is the leading indicator in terms of what we're thinking, and that is coming off from its highs of March. Ultimately, we have to be watching this story as it develops. We've got to keep quality assets like gold and silver in our portfolio.
Last minute to go, pal. Again, just go over some broad strokes, how people start and what they get in there.
Well, certainly, John, it's important to note you can simply go to our website, look at all the product that we have available in gold and silver. We'll help you with the pricing. You can set up a consultation. It's free of charge, and you can talk with one of myself or the other 2 partners of our firm. We guarantee that. If you want direct delivery home, make the purchase, set a budget aside, and we'll get the gold and silver to you by delivery, or you can pick it up. Alternatively, as I said earlier, you can store the product. We have storage options around numerous parts of the world. If you're looking to be more diversified, keep wealth in other areas, or right here at home in Toronto, we have a nice storage facility that allocates the product, puts it in your name, and keeps it safe and sound for you. You can make changes by phone call, and you can also rest assured that if you want to audit your product, see it, you can go there and get it done. The registered accounts, TFSAs, RSPs, whether it's in an existing institution, you want to bring it over to Delta, whether it's brand new TFSA, we can help you with that. We'll hold your hand every step of the way. That's easy. Or financing. If you want to take and get the most bang for your buck, we have the ability to finance up to 80% of your purchase. You can turn 1 ounce into 3 ounces. You could even say, I want to hold back as much as 80 cents of every dollar you're going to spend for a cold, rainy day, and do a little bit of further diversification. So those are all the ways we got, John. We want people to know it's important to diversify. We think gold and silver are the best way to do it. Come visit us at Delta Harbour anytime.
Reach out as we're done for another week. Do so. Get a conversation. Get educated. Rather, 1-888-335-8645. The number, deltaharbor.com online and youtube.com/Delta Harbour to educate yourself even further. We'll catch you next time. Hard money. Sauga 960.